Let's talk more on the markets now with Keith Lerner, Chief Market Strategist at Truist SunTrust Advisory Services. Keith, always good to speak with you there. Happy Friday. It feels as though that the market is in a really tight trading range. Do you think we're on the precipice of a major move up or down?
Hey, Brian, good to see you. Good to be back. I think we are in a trading range. Our call, towards the lows, we thought the risk reward was very favorable. The market was pricing in a recession. But now after the snapback, you're basically in this point where there's this huge stimulus, but there's still a lot of uncertainty about the path forward for reopening the economy. So our thoughts is that we're more in a trading range, probably on the high side, 2,900 to 3,000, and on the low side about maybe 2,450 to 2,600. And the way we're thinking from our clients, the risk reward was very favorable before. I think now it's kind of like if you haven't been in, you average in and you use pullbacks to become more aggressive. But I think we're in a little bit of a standstill, and also where correlations of the market start to come down as well.
Keith, I'd love to get your thoughts on something we heard from the former Fed president of Minneapolis today, saying that perhaps the Federal Reserve would be better to take interest rates negative when they meet again next week. Do you think that would actually be putting more fuel to the fire here, or could negative rates be a good thing for the U.S. economy during this pandemic?
Yeah, I think, first of all, I think a lot of other Fed officials have kind of pushed against negative rates. And I don't know that it would be a big help right now, because one, it would be negative from confidence, I think, to see negative rates. There's also a lot of savings that people have that would also go lower as far as the return on those savings. And then if you look at, in Europe, we got negative rates, and what is that doing to the banking system? So I don't think that would light a fire. I think the main thing, though, the more important thing is that the Federal Reserve is basically saying, we're going to do whatever it takes. And that should put some type of bottom on the market. The questions I keep getting are still people looking for a retest. And I think the one real positive for the market right now that should help support things is sentiment is still really depressed, which means expectations are still relatively low.
Hi, Keith. It's Heidi Chung here. So just kind of going off what you said earlier about this tight trading range for the market, I'm having a bit of trouble making sense of the market action that we have seen recently, though. I mean, just looking at this week, oil, a big market mover, and then we had that Gilead news yesterday that also moved the market. But going forward from here, is it going to continue to be oil? Will it be earnings? We have those big heavyweights reporting next week. Will it be the Fed? I mean, how will we determine the direction of the market from here on out?
Yeah, well, I think kind of what we talked about before, you're seeing more of this kind of rotation. So this week's energy has had a turn as well. But I do think just in general that, first of all, the earnings season, people are more focused on balance sheets as opposed to earnings because no one really has a clear picture on earnings. But I would say, I think it's more likely that the leadership that we've seen is likely to stay intact, and that's technology and healthcare is our two favorite sectors. And I think staples also is a good place. The cyclical areas will probably get these sharp bounces, but for that to be sustainable, we're going to need more clarity on the economy, and I just don't think we're going to get that in the near term.
Keith, I talked to Hilton CEO Chris Nassetta yesterday. We aired that this morning on here on Yahoo Finance, and he said the business is still under pressure. It may have gone past the bottom, but I take a step back here. I'm thinking, well, that means the business is still down, and I think a lot of investors might just be pricing in just too much of a quick recovery. Do you think the market is just being too confident here?
I don't think this market is being too confident. I think a big question we're getting ahead is there seems to be this disconnect between the economy and the markets. Well, the first thing is, especially the S&P 500, there's a big difference between how that's that composition, right? I mean, what's holding it up? It's technology, healthcare, staples. But the other areas of the market, even with the rebound, energy's down over 30%, industrials are down, materials are down. And then some of these areas you said specifically, like the cruise line or the casino places, they're down 40, 50, 60%. So the market knows those trends are still going to go negative. And I think, to your point, maybe they're starting to say, hey, there's some Fed support, and we've priced in a really bad scenario already. So I think the market actually is somewhat acting rational by differentiating between the winners and the losers.
Keith, one of the bright spots we've been seeing has been big tech, holding up fairly well. And we actually saw a nice rally in chip stocks this week. Do you think that investors are getting ahead of themselves a little bit with tech, or do you think that the rise we've been seeing has been warranted?
Yeah, our view, and we've been bullish on tech, and we still are positive. I mean, short term, it's definitely extended. I think everyone knows that, there's 5 or 6 stocks that are really holding things up. But the other thing is, if you look at where are the earning trends, that actually the ones that we have still strong, and you're still seeing tech relatively strong. And we all know after this, Technology was already a big part of the economy. That's only going to increase as well. And I think until there's more visibility about the strength of the recovery, people will continue to pay a premium for companies in the technology sector and also healthcare as well.
Keith, before you know it, we'll be getting the April jobs report, and the estimates and the reports are already starting to flood my box. And we're getting some calls for over 20 million in terms of total job losses for the month of April. From a market perspective, does it make sense to raise cash into a report like that?
I don't think unless you're a really short-term trader, Brian, because, I think about the last couple of weeks, the initial jobless claims data has been the worst and worst that we've seen in history, and in some cases worse than those really depressed expectations heading into the report. So the market is expecting a really negative report. I don't know how much that's going to tell us. Maybe it tells us how bad it really is, but that by itself, the market knows. One thing that's important, Brian, that we've been talking to our clients about is, our best estimate is that the economy will start to find a trough in July or August. It's an estimate. What's important to know from an investor perspective is that the market tends to bottom about 5 months before a recession, and that's kind of right in line with what we've seen. I just think we're probably more in some type of consolidation range right now near term. But again, I think the economic news, I think people are pretty well braced for a negative scenario. The biggest risk is maybe in the fall or so, if we have this reinfection that some people are concerned about.
Keith, but real quickly too, trough does not mean we're back to growth, right?
Yeah, and let me. That's an important question you said, Brian, because a trough just means you've stopped going down. It doesn't mean we're anywhere close to where we were before the decline in the economy. That's going to take some time.
All right, let's leave it there. Keith Lerner, Chief Market Strategist at Truist SunTrust Advisory Services. My first time seeing you without a tie. Nonetheless, we'll see you again real soon.
All right, thanks so much, Brian. Thanks, guys.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.